All right. Good morning, everybody. I posted a picture in the chat where I talked with AI and had it summarize the Fed speakers that were talking yesterday and what their talking points were. Just gives you an example, a way to perhaps approach it, because we're going to get another chance today. Powell will be speaking also as one of those Fed speakers. There is we're going to get some economic data on top of this too, but have to keep in mind these Fed speakers. So just kind of backing up to see who we get today. Bostic, Bowman, Kugler, Barr, Goolsby, and Powell. Man, that's a lot. That's a lot of Fed speakers. It's kind of a mixed bag. Japan down the most, 1.35%. This comes from the tsunami warning, the earthquake. There was, after the earthquake, there was fear of tsunami, so they put out a tsunami warning. Production shut down on a lot of manufacturing. So it makes sense that Japan's down, Hong Kong's down. With the US, we're down, but not as down as we were. We've already started to bounce back, rally back at the other side. FedEx had earnings and was okay. I want to hear more. First, I want to read into it a little bit more, but I believe since they're up nearly 1%, or they were the last time I looked, that their forward outlook is getting better. And that's a good thing, right? That ties in with where we think the US is going over the next 2 to 3 quarters. It doesn't seem like much, but FedEx and those shipping like FedEx, they have a lot of weight in what they say in their forward guidance. So always want to pay particular attention to those. As we go farther up into deeper in the green, Europe up a little bit, not quite 1/4%. So ADP numbers is kind of a big deal. Behind that, we've got ISM services. Those two, kind of a big deal just by themselves, even without any Fed speakers today. That would be enough. But we've got a lot of Fed speakers today. So it's going to be a very weird day. Be careful with the flows that you see and the opportunities. I would expect a hurry up and wait sort of scenario until we get at least onto the other side of Powell. But at any time before that, especially say when we get the ADP numbers, market could pop right on that or drop hard. And then the Fed might shift their stance a little bit and you know play a little word game. So just take it one step at a time this morning. This is the kind of day that will disrupt those pattern plays that we do, right? When we look back at the S&P and the NASDAQ on a day-to-day basis, there's a pattern to a lot of the days, almost like playing mahjong. You figure out what kind of day it is early enough, and you've got a template. You already know what we're going to do for the rest of the day. That's a very common thing, but not on a day like this. It's going to kind of throw that right out the window. We're going to be getting some data out of Japan this evening, so just be aware of that. Of course, that won't really affect us today, but if you're taking short duration trades, into Friday or next Friday, then paying particular attention to what happens in Japan is going to pay out. Now, remember, everything that Powell dug into during the FOMC kept coming back to jobs and jobs and jobs and jobs. So everything related to jobs, you want to pay particular attention to, because it's what the market's going to be paying attention to. A lot of the comments made yesterday was more along the lines of, yeah, there might have been projections of 3 rate cuts, but that's not a promise of 3 rate cuts. And until we see that we need to cut, we're not cutting. That was basically the long and the short of it. Nobody wants to stand in front of this freight train, and they keep talking about how strong everything is. So keep your eye on the job numbers. Also, any headline layoffs, that's a really big deal too. If they keep talking about this slowing economy that's eventually supposedly going to happen, we want to see signs of that. And one of those signs would be headline numbers of layoffs, big companies. But careful with those. I've seen layoff headlines in things like Meta, Microsoft, Apple, Google, and even after those headline layoffs, they still have more employees than they did pre-COVID. So, yeah, okay. Maybe they just got a little too swollen anyways and need to clean up. Eight 15, 9:45, 10, 10:30, and then 10 after 12. This isn't all of it, right? There's a lot more, especially with all those different Fed speakers. They're only really listing Powell here, but there's going to be a lot more than this. Need to adjust this thing. So when it comes to the founder's note and the levels, I was right. The ones for Think or Swim are out early. The ones for TradingView, we have to wait until they update the founder's note. So once the AM founder's note comes out, then the one for TradingView will work. I'm looking for a particular thing here. These levels aren't. They're not right. I updated it on the wrong account this morning. All right, so we can see we're right underneath the volatility trigger. We do have a voodoo line, this green line they call the forest. The put wall has been brought up to us at 52.37. And the call wall, 53.52. We're underneath the weekly pivot point. We're underneath the daily pivot point. And it's a close call, but we didn't hit that yet. So it's a missed daily pivot at this point. Yesterday was also a missed daily pivot. We didn't hit it at all. So yesterday's counts for today, today's count for tomorrow. If you want to know more about daily pivots and missed daily pivots, you can just hit YouTube. It's not my strategy. I don't trade it. I just use it for analysis. We're under the previous week's close. We're under the previous week's low. So we've had a complete and total breakdown. We're underneath the 10-day moving average, and we bounced off of the 20-period daily moving average. But we did manage to keep above it. Zero gammas at 52.27. And we're closer to the lower ADR than we are the upper ADR. And we're building out a bit of a megaphone pattern. Volume, it's a little light, but nothing to be overly concerned with. 70, 71, that's fine. It's not a big deal. If it was below 60, we'd need to be worried. If we didn't know that there was all these different economic events today, we would need to be worried. But with just light volume on its own, knowing that we've got all these economic events, not a big deal. Everything's okay. So we discussed earlier in the week this really big candle of control and talked about that 5250 line and how we could get underneath it because liquidity resides on the other side of the pivot, but that we would need to get back above it. We're still in that same boat right now. We're very close to this level. On a day-to-day basis, we can get below this level, but at the end of the week, I really want to see us back above that line. Now, it's not the end of the world if we don't get back above that line. If we close below it at the end of the week, then it kind of lays out the argument that we're much more likely to hit this 81. And if we get to that 81, it becomes much more likely that we're going to get to the 10. Of course, we'd be talking about a new week. And so the 10 would be higher than it is right now. You can see on a week-to-week basis, that 10 has moved up considerably. We can even just make that a little easier to see by putting a dot on each new candle. So from a week-to-week basis, it does continue to rise up significantly. Even with a pullback like this, it is still going to, because of drift, very likely print one more up or maybe maybe sideways, but I wouldn't expect sideways yet. You see, even on these red weeks back here, it was still going up. So we'll see how that turns out, but really it's 52.50, right? At the end of the week, if we're below that line, it kind of opens the door for us to hit these other two levels. Otherwise, if we can close above this line by the end of the week, maintain in the upper part of this large candle, then it begs to differ or brings in the argument that we'll maintain that 52.50, get back above 5,300 and continue the expansion towards 54. And right now, a lot of whether or not we're going to be able to do that comes down to Fed speakers and how the market interprets what the Fed has to say. Ten-day, 30-minute volume profile. We did come down into this lower volume shelf, 5240, and so far it's stuck. Throughout the day today, we're going to lose this lower volume unless we break yesterday's low and continue to expand it down, so that by tomorrow when we come in, the entire profile will be much smaller at that point, be about that big. And for a 10-day profile being 100 points wide, that's not very wide for a 10-day profile. We've seen it tighter, sure, but because of last week where we spent so much time sideways and waiting, this just really has tightened us up into a very narrow range. But the range is set. And so unless we break this low, by the time we come in tomorrow, that will be our new zone. And it will be much easier to anticipate a breakdown with some measured moves and quantify how far that leg lower would be. Otherwise, if this low holds, we'll work the pivots back up through the other side. We don't have a classic pattern like a D or a B. It's just a mess at this point. All right, so we hit that VPOC yesterday. We're done with that one. We hit this lower one, 52.39. We're done with that one. But we're going to move it and use it for the new VPOC that was created yesterday. It seems pretty close. Nope. There we go. 52.45.5. That's the new VPOC given to us from yesterday's price action. Notice that most of the price action, most of the volume is in the lower part of the entire thing, right? If we were to just map this all out. I think Spot Gamma had something to say about this the other day when we had the same thing over here. You're going to want to read yesterday's founder's note. I can't remember if it was yesterday in the AM or if it was the PM of the day before. I bet it was PM from Monday. Read that founder's note. They talk about how all of this volume was in the lower part of that day and what it meant for the next day. We've got the same scenario all over again. Today's discussion is looking at yesterday and seeing all of this volume in the lower part of the day again. So worth taking a look. Might get a little bit of insight on what to expect, but this narrow zone and this narrow range that we have this morning, much like yesterday, is winding up energy. When we finally come out of this, it's very likely that we're going to be moving with energy behind it. The analogy that I've given before is dropping a ball off of a tall building. It picks up energy as it moves. Throw a ball when you're out in the yard. Your energy is what propelled the ball. As the ball moves, it loses energy, falls. So when a market moves, sometimes it's moving with energy behind it. Sometimes it's moving to get energy. You can use the RSI Laguerre to figure which one of those that we're doing. Even without the RSI Laguerre, I can tell you if we sit sideways like this, we're going to build up energy. And that once we come out of this range, we will be using that energy in the move. So we'll be moving with energy behind it. Still comes down to what's going to be the catalyst. Will it be ISM and the econ data, or will it be Powell? So we did get to the lower weekly expected move level and came back inside it. And so far we continue to get lower closes. Somebody asked yesterday if if it was viable to do the day two, take the other side play. This is a strategy that I developed a few years back where you go the opposite direction if price hits the edge of the expected move on a Monday or a Tuesday, like it did back here, for an example. If it hits the edge on a Monday or Tuesday, you take the other side, and generally speaking, it's going to work out pretty good. We almost hit that one. That wouldn't have worked if you'd have tried to go the other direction. It's got a pretty decent win rate. There's nothing wrong with it statistically. My answer was wait until the later part of the day today. Let's see how it looks before stepping up to that kind of trade. And later in the day, my assessment was I'm not ready to take a swing on the S&P until I see a close greater than the previous day's close. That's where I'm at right now with the S&P and the Qs, right? We get that from either one, then I might reassess. But as long as we continue to get closes lower than the previous day's close, then I'm willing to not take a long. It's not asking for much, right? I'm not asking to get higher than the previous day's high or anything like that. Just close higher than the previous day's close. Because like we talked about the other day, there's a system of moving to the downside that the market likes to use so that it doesn't just see a market crash and burn really fast. You get big moves to the downside early in the day, kind of rebound and run back up in the later part of the day, and yet we still manage to close lower than the previous low. That's the tactic, right? And you can see some really clean price action making those sort of moves to the downside where it's just a nice, gentle move down, like a grind lower without getting out of control. you don't want to try to go long in that environment because it's just going to keep grinding lower and chopping you up. Hey, we got the AM notes. Yay. Obviously, I haven't had time to read them, but I'll put them in the chat. Do, 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 do. All right. So you should see that populating in the chat now. So the thing about taking the other side of this on the weekly expected move, I developed that strategy by doing a look back. I went back and looked at week after week after week, previous histories of where price has gotten to the edge of the weekly expected move on a Monday, a Tuesday, a Wednesday, and yet still managed to close inside the box and or at the other side of the box by the end of the week. The numbers were good. I haven't done that work in well over a year. Things change. I don't know how good the numbers are now compared to what they were when I did the numbers. And it's an easy thing for you to do. You can go back and do the same thing. Look at every single week and look at where we broke out, if we broke out on a Monday or a Tuesday. I really use those first 2 days for this strategy more than anything else. If we get to the edge on a Thursday or a Friday, I really don't like to play those, right? Monday or Tuesday work good. And then on the other side of that, keep in mind, it's not exactly like you want to buy a call because there's no real promise of move to the other side, right? Calls are what you use when you have an actual destination and an expected move. It's more of, we don't think it's going to go lower. So selling puts makes sense. Buying calls, not so much. Selling puts just says, I think you can maintain above that level by the end of the week. So if you did want to buy calls, I would keep it cheap, right? Try to use the cheapest calls you can get. Certainly not doing it on the SPX. You'd want to do it on the SPY. If you do the SPX, do it in a call spread. That way, it, like a debit spread, and then you can minimize your risk. SPX calls are just so expensive. These are not exactly a lottery play, but it's based on statistics and math instead of a real, technical analysis based on price action, momentum, and trend. So, you want to limit your exposure when you're playing with statistics, seasonality, and math. That's what I started trading, right? When I was new. That's why options were so good, even for someone like me who was new and didn't know how to do technical analysis. You can still trade if you can't do technical analysis, just trade the math. This is the second print below the 10-day that we've had this year. We have not had, so well, let me rephrase then. We got it right here at the beginning. At the very beginning of the year, we had 3 days in a row below the 10. Since then, we've not had more than 1 day below the 10-day since. So a pretty good reset. It would not surprise me if we can get down into that 50. So you can see we're on the 20. We've hit that 20 multiple times this year, just kind of tickling it a little bit, and we've come back above it. So We haven't been down below it since all the way back in January when we had that really hard dip. We have kind of stalled out and topped out here. It wouldn't surprise if we actually do get a true breakdown below it like we did back here. If we do, then the next level we're going to focus on is the 50. Can we stay above that 50? Are we going to get down and tag into it or not? And then will it actually hold if we do get down into it? I really don't think it's going to get that bad. I'll have to readjust some permissions. That was weird. So I really don't think it's going to get that bad. I don't think we're going to be able to get down into that 50. It's a hurry up and wait until proven otherwise. We want to see how the numbers come out with the economic data and then keep track of the Fed as they speak today. I'll still challenge you to use AI, try to get a summary of the Fed's statements today and see if you can, get a better sense of their collected message. Everybody